The Darth Silver thesis is not that silver is no longer valuable or it's going away. I never said it, and it wasn't even a bear case. The great utility of silver under the gold standard was you could use it to make change for gold. There is money to be made in this space, even if spot uranium does nothing for the next few years. I mean, eventually, for inflation reasons, it has to start going up again anyway. I don't expect that. I'm not saying it's not going anywhere. I'm just saying it's wrong-headed to pull your hair out about uranium not doing anything when it's there. It's at the price that makes our favorite, development projects work.
Where do you see the most asymmetry right now, like in any given sector, whether it be gold, silver, uranium, oil, gas? What do you think?
Well, I probably have to agree with Rick, and it's
Lobo Tiggre, thank you for coming back on, my friend.
happy to be back with you.
Hey, Lobo. So give us your 60,000 foot view of the economy, the markets as a whole. Let's start off macro and then work our way down.
All right. Well, macro won't be any surprise to anybody who's watched us talk before or seen me in other interviews. I am sticking to my guns. I am still in team hard landing, with the caveat or understanding that, as soon as that becomes obvious or undeniable, the easy money helicopters fly again. So I'm not saying we're going into Doug Casey's Greater Depression or a protracted, painful recession. I'm saying that the breakdown from the long and variable lags, which are only just now coming due. Right? All those people who say if we haven't had a recession yet, we're not going to have one. That's just historically ignorant. We are just now getting to the average length of a U.S. lag between tightening monetary policy and a recession. And this is anything but an average situation. So anyway, my outlook is still, the Fed is breaking stuff. There will be more signs of undeniable harm coming up ahead. That makes me near-term bearish, if you will, or more accurately, I think just hesitant to put money into even the best industrial commodities and minerals until I'm sure that's done, the damage is done, or I'm just wrong. And I think it's almost irrelevant, but not irrelevant. If I'm right, I think that really lights a fire under gold and silver as monetary metals. But I'm bullish on both anyways, because even if I'm wrong, the Fed itself is signaling, rate cuts soonish, when we get to them. We're talking on Fed Day Eve, right? I'm sure Powell's going to turn me on my head tomorrow, but they're continuing to say, yes, we got work to do, but we've won the fight on inflation. We're headed towards these wonderful cuts. They're coming. And that's bullish for gold. That's always been bullish for gold. Gold doesn't pay interest, so higher rates are supposed to be bad for gold, and lower rates are often good for gold. So either way, I'm bullish on the monetary metals. And I love uranium either way. It's gotten boring. It's not doing anything. People have lost interest. It's not quite hated, but it's in that sort of limbo where, it's not making new records. So people have stopped talking about it. I think that's a fantastic source of opportunity. Those are the takeaways from the macro. Where you want to go from there, up to you.
Well, let's just go down to the gold and silver market. We've been seeing a bit of a slamming down of gold and silver prices, although it seems to be coming at the heels of a couple news items. Number one, the jobs report. Number two, it appears that China might be ceasing its gold stacking operation, for lack of a better term, out there. Okay, no, there isn't a lack of a better term. I just
there's no better term. Yeah. No, I'm glad you bring that up, because I think it's entirely wrong-headed. In the first place, the China news came out first, and gold started sliding last Friday as we're recording this. It started sliding, basically not long after that in the news, other news, economic news from China, basically around midnight. And we didn't get the jobs report until 8:30 in the morning Eastern time. So it wasn't the jobs report and, oh, by the way, China. It was China and, oh, by the way, jobs report. And also, I just think it's wrong-headed. In the first place, just because the central bank doesn't do something 1 month, that doesn't mean that's it, that's over. It's necessarily a change in direction. I have said this from the beginning, a couple of years ago, when the central banks really started heating up their buying and the gold bugs were all celebrating. I said, beware of who your friends are. If as a gold bug, as a hard money advocate, as a central bank skeptic, if you're cheering because central banks are now your savior, there's an issue there for you to think about. But central banks, it's not like they have orders that we're going to buy the same amount every month, and for the next 10 years or something like that. It's not the way it works. And even some of the others, you've seen Turkey accumulate, and then suddenly they need money for something and they sell something. That doesn't mean they stop. So my point is, the reason why the global South central banks, BRICS central banks, are buying gold hasn't changed. Nothing has changed. It's not like China suddenly kissed and made up with Biden and they're happy to have their financial lifeblood flow through New York again, and it's all fine. No, that nothing has changed. So the market's, I think, overreaction to the news that China central bank didn't happen to buy anything for 1 month is overdone, ridiculous, wrongheaded, and a source of opportunity. To the degree that people are placing too much emphasis on this, I think it's actually a short fuse opportunity. If I'm right, if China hasn't actually changed its policy, the central bank is going to be back by next month or whatever, then the moment that news breaks, we should actually see a pop in gold. Oh, China's back again, right? So if not you and I and our very savvy audiences, but if the COMEX traders or LME traders who are placing too much emphasis on the central bank action oversold it on the news of a China pause, I think there's a case to be made for them overbuying it on the news of China coming back. But even that, I think, is sort of besides the point. Gold pulled a hockey stick in 2024. And that wasn't because of China's central bank buying. China had been buying all along. So something else happened this year besides the PBOC of buying. And I don't think that's changed. It'll be very interesting to see what numbers we get out of the China Gold Association and if the retail buying has continued. It's not like the PBOC put out a memo to everybody in China, hey, stop buying gold. And if they did, they probably would buy more because they would scare the bejesus out of everybody. So I really think that market reaction was overdone. And I think it will reverse. So I never do this. This is as close as I get to making not just a prediction, but like a near-term prediction. But I think that this particular market dynamic will be unwound in the very near term. But I also think bigger things are going on. But back to the jobs report thing, it's unbelievable to hear the talking heads on mainstream financial media actually saying, blowout jobs report. It was not a blowout jobs report. 500,000 new jobs, that's a blowout jobs report. This sort of, so-so, not so bad job creation. The fact that it beat, the expectations of the economists, the mainstream media deems to poll, doesn't make anything a blowout jobs report. And of course, if you look at the birth-death model, it turns out that almost all of these new jobs are just assumed to be there. They're not actually measured. They don't actually know that they're there. It's part of the model. The model says they're there. And then if you look at the household survey showed minus 408,000 jobs at the same period. So, it's sort of amazing how it works, how the mainstream financial media will latch onto some favorite number that they like and completely ignore other data. This isn't just anarchist Lobo talking, my own definition of unemployment that I made up, in the basement here, and trust me, the government's lying to you. I'm quoting the government's other number, right? The household survey comes from the same source, and they showed 408,000 less jobs, right? But no, we don't pay attention to that. We just like our favorite numbers.
And most of the increases come from part-time jobs.
I've seen that too, and the multiple job holders. But you got to be careful. A lot of these numbers, you need to pull back and look at the big picture. Like if you look at the last few months and you see the number of people holding multiple jobs going up, it's like, oh, wow, this is an emergency. People, it's terrible. But if you zoom out, that's recovering from a low level. And it's kind of just getting back to where it was before. So that story about, all these part-time jobs and multiple, it's an indicator but it's not as strong an argument as some of the bears would have it be. Yeah, I don't know how far you want to go down this particular rabbit hole, but the point is that there's a lot more going on here than just those numbers. And the market's obsession with I think the wrong numbers is a source of opportunity, because if the market is wrong, right, if it's mispricing something, reality matters. At some point, reality asserts itself, and you get, a slingshot move in the other direction. So to the degree that this thing is creating buying opportunities, I think that's a good thing for anybody with the intestinal fortitude to bet against Mr. Market.
In buying opportunities, and would you start to nibble on the miners at this point, or are we still in an environment where we're trying to see?
It depends on which one. No nibbling. If it's a great gold stock that I somehow missed or I liked, but it got away from me, and then it goes on sale because people have these wrong-headed ideas about where the market is going. I mean, there's still people out there that think that, gold spiked in 1980 and then went into bear for years. Gold spiked in 2011 and went into bear for years. Gold spiked in 2020, so it's supposed to go into a bear for the years ahead. There's still, I think, a lot of people out there in the mainstream that think that way, and this is one reason why gold stocks have underperformed the metal. But 4 years later, after the spike, and we're now looking at new, at least nominal all-time highs, they're wrong. And at some point, they'll realize they're wrong, and they'll go, right?
That's the point of investing, right? That's the point of investing.
Yeah, I think
betting on the premise that's wrong.
So there's no nibbling here. If I see a stock that I really like, and I did, by the way, I just added to the portfolio with upsized stakes in companies that I wanted to add to, larger purchases than I've made before. And I'm happy to do that. And by the way, despite my Darth Silver mantle and all that, I've added silver to my shopping list this year. Before, I was concerned about whether or not silver would track copper more, which it has been doing over the last year, and whether it would be hit by the industrial demand hurting silver more than gold, because gold has almost no industrial demand, right? And it's not that I'm anti-silver. I wasn't a silver bear, but I was saying, at the beginning of 2024, I'd rather focus on the gold stocks and let's see what the recession does to silver demand, if anything. But the beginning of this year showed that silver was quite happy to not wait, not dally, follow gold up. Copper did too, but that was I think copper specific. Anyway, point is that I have added silver to my shopping list. My big problem with silver companies, I'm not concerned about the metal or the direction of my macro thesis. My concern is political risk, with Mexico taking a hard left turn here. Bolivia is still a basket case. Peru is headed for Bolivia status, maybe. I don't know. I mean, still a lot of good mining in Peru, but the permitting and social issues there are really tough. And even Chile, which has depended so much on mining for so many decades, has been increasingly every year making mining more difficult. So it's difficult to find, well, let's say there are great silver projects out there, but they're few in jurisdictions that I'm willing to risk money in. And that's a problem for me.
What about the physical metal itself? What about physical silver? How's your sentiment on that?
I see it as basically big gold. It takes more space to have the same amount of silver as gold. So I like them both as money. They're interchangeable. Whatever the gold silver ratio is, doesn't matter. They're both physical value that you can hold in your hand. They're savings. So I really don't look at the macro or the current exchange rate with the dollar for buying either. I stack when I have money that I want to put away for long-term savings. I tend to stack more gold than silver because, I could put $1 million in a briefcase. It takes a much larger space to stack that much silver. And you got to keep it from tarnishing if you don't slab it all. I have a tendency to give away silver to friends and relatives and things and stuff. You put an ounce of silver in somebody's hand who's never thought about real money before, and you see their eyes open up, and it's a cool thing. You know what I'm talking about. You've done this, I could tell.
It sparks something inside of you. There's like an instinct that you
take some teenager, right, who thinks you're an old boomer, and you just put that in their hand and they feel the weight, and something goes off, right? So I tend to replace silver after I give it away. I know I shouldn't do that. It's savings, but I can't help myself sometimes. So the point is, I don't look at the market for when I'm okay. If the metals just went like that, that might not be the week that I go stack a whole bunch more. I might look for a dip or something. But I don't buy silver or gold because I think the price is going up or the exchange rate with the dollar is going up. I buy it because it is what it is, and I want to have more of it as savings. So, I'm not worried about the market for that. I don't speculate on the metals. I just put them away. For speculative purposes, that's what the stocks are for.
Interesting. Yeah. So people tend to kind of bucket gold into its own category as insurance, but you would say that silver also fits into that category then.
Yeah, I think they're very interchangeable in that regard. I mean, the Darth Silver thesis is not that silver is no longer valuable or it's going away. I never said it, and it wasn't even a bear case. The main point was that when we get a new gold standard in the future, and I do think that's likely, maybe not the same way it was in the past. I think it becomes, supported by blockchain, so we don't have the transaction costs. You can move it around very quickly and easily, and all that stuff. I suspect that's coming. I'm not sure that silver goes into that. I don't see a bimetallic system being necessary. I mean, the great utility of silver under the gold standard is you could use it to make change for gold. You didn't send Junior down to the corner store to buy a loaf of bread and a pint of milk with an ounce of gold. It was too much. Or even a quarter ounce or something. It was too much. That's what silver was for. And you bought something, they gave you change and, smaller bits of silver or copper even, right? But if you're transferring the ownership of gold digitally anyway, well, you can transfer the ownership of 1/1000th of a gram or whatever you need. There's no need for another metal to make change. So what it earned me so much emotional response was when I said that even if we have a gold standard, that doesn't guarantee that silver is going back into circulation. Therefore, it's a mistake to stack a garage full of pre-1965 junk silver or something, assuming that it's going to go back into circulation. You may not need that much silver because if it doesn't go back into circulation. But that, again, it doesn't mean it's not valuable. It doesn't mean that I'm not interested in investing. I'm actually very keen on adding more silver stocks to my portfolio if I can find one in a country I consider investable.
Okay. Well, let's go ahead and pivot over to the other yellow metal, everyone's favorite, uranium. I know you've got a few things to say about uranium, Lobo, so I'll let you take the stage.
All right. So I love this setup that we're in right now. It's not quite as hated as it used to be when it was $18 or when it was $30 and nobody believed it would go up, or even when it was $50 and nobody believed it would go up. But it's boring. It's not doing anything. It's amazing to me how much money we just made in the uranium space. And now there's all these people who's like, it hasn't done anything for 2 months. Like, are you kidding? 2 months? You want to make millions of dollars and you're not willing to wait more than 2 months?
URNM is so the old resistance at URNM was $50, was about $50. That appears to be new support right now, which is where
The
we're sitting.
situation is we have reached the incentive price to incent new production coming online, and that's happening. So there's, besides my exasperation with people's impatience with the commodity, the market doesn't care what we want. But it's a mistake to be upset at something just because it's not going up. If uranium doesn't do anything but go sideways for years at plus or minus $90, that is a price for the good companies. They make money. So for the actual business of mining uranium, we're already there. It doesn't have to go up. All it has to do is not go down too much, and the companies will gush cash. And even if it does go down significantly, the better ones will still make money. So there is money to be made in this space, even if spot uranium does nothing for the next few years. I mean, eventually, for inflation reasons, it has to start going up again anyway. I don't expect that. I'm not saying it's not going anywhere. I'm just saying it's wrong-headed to pull your hair out about uranium not doing anything when it's there. It's at the price that makes our favorite, development projects work. If your price assumption was $60 or $70, $90 uranium is great. Your project now works. All those people that said to you, you idiot, how could you buy this thing? Uranium's $30 and the project requires $70 uranium. You're being an idiot, right? Well, now the answer is, who's the idiot? We were right. The price is higher than that now. So there's nothing wrong here. There is nothing wrong with the uranium space. It is doing what it's supposed to do. That said, I think Kazatomprom is going to disappoint again. Like, we still don't have the 2025 guidance. They slashed this year's guidance and they put off 2025 guidance. I think that's going to go down. It remains to be seen if they can actually deliver even, as much as they did last year, which, by the way, was less than in 2022. If you listen to the Uranium Insider, he's pretty sure that they're going to fail again. I think you've talked to Justin. I just see this space as one where the supply is not keeping up already. And it seems like every week we see new stories about new sources of demand. The demand was already outstripping supply, and now it just keeps going up. And instead of hearing of, massive new supply coming online, we keep hearing about more trouble bringing mines up to speed. And, oh, well, we're late here. Oh, well, we don't have enough sulfuric acid, or, well, we're producing uranium, but a lot less than we hoped to this year. We may have to be buying on the open market. But those are the kinds of headlines we're seeing. So high prices will cure high prices eventually, but it's not happening yet. So I'm actually quite bullish. And the fact that uranium has gotten quiet and people have gotten bored with it, I think is a terrific opportunity. And, the top dog in the space hasn't really corrected much, but many of the others have. And so if you thought you missed it, like last year, uranium went to $100 and you missed that whole thing, I think we're seeing opportunities shape up right now. And for a contrarian, I think that's fantastic. And by the way, I have a free download on the website, if you don't mind me mentioning it, independentspeculator.com. Yes, I have paid stuff, but there's a free uranium report on the website that we just updated with the latest news from Kazatomprom and all that. So if you're not sure about the thesis and you want to inform yourself, it's not a phone book size report, but it's a thorough overview of entry level analysis of what you need to know to begin making decisions in this space.
I think a lot of the angst that comes from the uranium space, it just depends on obviously where people entered into the uranium space. There's a lot of entry points occurring at the height of 2022 and the height of 2021 when uranium, we can all recall when Sput came online and shot uranium up. I think a lot of people ended up buying in that zone. So the move up, they may not have been able to experience the move that you and I have, Lobo. We've been in this trade for years. So we've been able to reap a lot of its benefits, but that's what happens when you buy on sentiment, when you buy on positive sentiment. And now what you're describing is another opportunity to get into this trade. So
it's kind of funny. Like, I'm saying this is an opportunity because it's boring, right?
Yeah,
but
exactly.
The kind of person who chased it at the top because everybody was buying is probably the kind of person who's not willing to buy it now because it's boring. And it's unfortunate. And maybe I'm wrong. And if you're one of those people,
well, by definition, that's where you're going to have your peak retail interest is at the top, right? By definition. So you're going to,
it's hard to be a contrarian. Everybody talks about it or they say it, but it's really hard. People are emotional. My newsletters are about more than gold. I cover all kinds of commodities, mostly metals and mining, but not exclusively. And I'll tell you, I sell more newsletters when gold's going like this. And I don't advertise more. I don't try to sell harder. It's just people want to buy when it's going like this. And when gold's dropping, I stop selling newsletters. But that's when you should be buying. Like, if the idea is to buy low and sell high. So
hey guys, quick pause. Are you looking for the next 10 bagger, 100 bagger stock? I mean, who is it? We all are, but you've got to do your own due diligence. It takes a ton of work. You've got to put in the work. But now you can leverage Rick Rule's due diligence webinar. Rick Rule will personally grill Magna Mining CEO Jason Jessup. Well, so what's so special about Magna Mining? Well, they're up 38% on the year. And on top of that, they've got a super small market cap. 129 million Canadian dollars. Now, if their valuation goes up to $1 billion, that's a 10x. If it goes up to $10 billion, that's a 100x. But how do you know this company's legit or whether or not it's blowing smoke? For $29, you can find out the answer to that question. Tickets are in the description box down below. Go ahead and register. I mean, $29, guys. I'm sure you guys have laid down more than $29 in penny stocks, hoping that they go up. Well, now you get an expert, probably the best expert out there in mining education, doing your due diligence for you. Taking place June 19th, 4 to 6 p.m. Pacific. Tune in and find out. Now let's get back to the video.
For the 3 people who didn't stop listening when we started talking about uranium, thank you very much, all 3 of you, right? This is a good thing. When it's crickets out there, you have less competition. And that's a good thing for the people that have, it's funny. When we first put out our uranium report, it was delayed. And, we had wanted to do it ahead of the first big rally, but it was delayed. So it was kind of released at a hot time and people were asking about it. The downloads were going like this. Our new uranium report, we've put it out perfectly timed. The uranium corrected. It pulls back from 106 to 86 and people are bored. That's exactly when you should be informing yourself and looking into buying something like this. And we put out a new updated uranium report with some extra sections there and the latest analysis, and nobody wants to download it. So, I guess word to the wise, if you're one of those people who's willing to be a contrarian amongst contrarians, I think there's an opportunity for you in this space.
So I do know you have this My Take service. I just recently learned about it, just a few minutes before our interview, actually. So I want you to talk about that for a second, because you get into the companies in these various mining projects, whether they be in uranium, gold, silver, etc. And so talk about that database you've got there under your My Takes product.
Well, thank you very much. This is unusual, and I'm glad you brought it up because it's probably the most misunderstood thing I've ever done in this space. Now, people are used to newsletters. Here's a newsletter, here's the portfolio, here's my recommendations, whatever. This is not that. There's no portfolio, there's no recommendations. It is literally a database with about 800 company evaluations right now. And there's 2 things about this. One is you say, well, database, what do I do with 800 companies? It's not the point. It's a database. So you can sort it. You could sort it by gold, uranium, silver, or other commodities. You can sort it by type of company, right? Producers, or if you're not interested in, crappy little junior explorers, I only want producers, right? So you can sort for gold producers, not in Mexico, if you wanted. That's the sort of thing. So the power of a database is it helps you create lists. Instead of Lobo's list, it's my own list. I want silver explorers. Maybe I'm high risk. I want only silver explorers. You can sort for that, but it's not just, okay, here's the names. What you get from the database isn't just, okay, here's the companies that match your criteria. It's here's my evaluation of those companies. It's my take. And we update the database every month. If there's major developments in any stories, we update the database. So you have an independent analysis. And there's nobody else I know of in this business who does anything like this. So you get a list and you get not just a list, but you get like consumer reports on each of the companies, the good, the bad, and a distinct thumbs up or a thumbs down. This isn't just me being nice and coverage or whatever. And that's the other last thing. There is no amount any company can pay us to get a positive evaluation when the company deserves a negative one. And we're pretty brutal. It's 90% negative because most of the companies are crap, honestly. Right? So I won't go on about it, but thank you for the opportunity, because people just don't understand this. People subscribe all the time and they're like, oh my God, I had no idea. And the value, you can create a shopping list if you want of things that you want. But I think the greater value may be the warnings of all the reasons you should be cautious. You may fall in love with company X, Y, or Z, but you didn't know, A, B, and D about it. That's a danger sign, right? And so, yeah, this is a powerful tool. Like if you couldn't afford to pay me $5,000 an hour to be your due diligence guy and send me off to go kick rocks on your stock for you, you can go through the database and get my same judgment. And by the way, clients can make requests. So end of story. It's completely different from anything else I've seen out there. The closest thing would be Rick Rule's evaluations, portfolio evaluations, but it's not as in depth, and doesn't have the follow-up that we have. You can't sort it, it's just a score. So even that isn't quite what we do. I'm not criticizing Rick. I'm just saying there's no other product that I know of that's like this out there. And it's relatively economic, by the way. This isn't, thousands of dollars. So thanks for an opportunity to mention it.
100%. So where do you see the most asymmetry right now, like in any given sector, whether it be gold, silver, uranium, oil, gas? What do you think?
Well, I probably have to agree with Rick, and it's maybe coal, but
Hmm.
I'm not a huge fan of coal because it's trickier. It's not like gold is fungible, or even oil, right? You can ship it around the world easily. Coal is a much bigger bulk commodity. The markets tend to be regional, like Australian coal for China makes sense. But Australian coal for Germany doesn't necessarily, these sorts of things. And the quality of the deposits is more variable. That companies, it's just trickier. But in terms of asymmetric, like it's so hated. Uranium used to be the most hated of the 92
Right.
naturally occurring elements. Now it's coal. Coal is public enemy number one. Even uranium is gathering a green mantra now. So I think that creates opportunities, but I think for more sophisticated speculators, like you really need to know what you're doing there. You can easily get your posterior handed to you. I think a more obvious and easier one to get into would be just oil. Like I'm not buying any oil stocks now because I'm still expecting the recession deniers to give up the ghost in the United States. But when that happens, oil will be amongst the first things on my shopping list because, I mean, we still have the Stop Oil Now crowd. I don't mean just the protesters. I mean their sympathizers and everything. I saw a headline. I think it was yesterday. There's some scientist somewhere coming out saying that the governments of the world should issue no new fossil fuel exploration concessions at all, anywhere. Like the known deposits, undeveloped resources, and so on, that's enough, oil and coal and other things, to get us to the energy in utopia in 2050. So there should be no more exploration, no more development, just, use the fossil fuels we already have and we'll be fine. I don't know how you could come up with something more delusional than this idea. But, it's exactly what the message the powers that be want to push out there. So if governments listen to this and they start, choking off more licenses for the people that actually have oil and gas and coal deposits, the value of those things will go way up. So ironically, these Stop Oil Now people are going to push oil prices much higher. And the people who invest in the right companies who will deliver this absolutely essential, irreplaceable commodity to the market, that they've got the goods already when other people will be struggling to find more. I think they're going to make a ton of money. I think triple digit oil prices is going to become the new normal, and there'll be a huge amount of money to be made precisely because the industry is still being starved of capital. The permitting is getting harder. It's I think it's sort of the contrarian's dream setup.
And rates higher for longer also play into it as well, because it becomes harder to finance these big projects, because it costs like $1 billion to build like a oil rig. You've got to finance that at 5.5%, 550 basis points Fed funds rate.
Yeah, that's another Rick Ruleism, cost of capital, and how that affects the capital intensive businesses like this is a big deal. You can almost forget the narrative and just look at cost of capital, and then you can follow capex after that. How they relate. So yeah, I think that is part of it, but I do think that the Fed will cut rates because there will be economic damage that becomes undeniable. And I may be wrong, but this is my base case. Is I do think the Fed cuts rates. Despite the sticky inflation, they're still talking like they want to. So I think that jawbone is telling us where policy is headed. And then it'll be interesting because if they cut rates without having actually beaten inflation down to their, arbitrary 2% target, I think that also kind of admits defeat in a way, and it ushers in the idea of stagflation again. So it'll be interesting to see where that happens. But,
So you think they'll move in
yeah,
tandem?
I just think that the oil is very much one of those ones where copper is also like a no-brainer for me coming out of the recession, but it's not hated the way oil is. The problem with copper is permitting these huge open pit projects where the big deposits, there are small high-grade deposits, but they're small. To really move the needle on copper supply, we need more of these big, huge porphyry megapits, and those are really hard to permit. But copper isn't evil. It isn't hated the way, oil is. So I see more leverage in the oil space as it's starved of capital. There's less supply coming online. Even the Saudis are talking about, the energy transition and what they're going to do next and all that stuff. So I see asymmetrical risk and reward in that space.
So going back to the Fed and rate cuts. So you think they'll move in tandem with the ECB and the Bank of Canada in terms of what they did earlier in the week or last week?
Yeah, they all say they're independent, that, we don't pay attention. And to be fair, the Fed often doesn't go in lockstep with the others. And I remember times where the Europeans were very upset at the Fed for not following suit for them. But that's only for a while. Like eventually it seems like whatever they say in public, they're all following the same rule book, or they're all following the same economic models. And I suppose if you believe that the United States economy can be in a real boom while the rest of the world is in recession, then yeah, it's possible for the Fed to have very different policy from other central banks for a long time. But I don't think that's possible. The United States, okay, it has the good fortune of having more energy independence than Japan or Europe or other things. So it's in many ways more isolated from the global fluctuations, but that doesn't mean disconnected. I forget what the exact number is, but something like 30% of the S&P 500 companies are exporters. So if the rest of the world is in trouble, if 30% of the S&P 500 is in trouble, that doesn't make the S&P 500 okay, right? That's a problem. And the US is an exporter of a number of things. And if its customers are not buying, that's an issue. I think that American exceptionalism, it gets taken a little bit too far by investors.
Gotcha. Well, hey, Lobo, thank you so much for coming on. Where can people find you?
Well, independentspeculator.com. We've already talked enough, about my services. Just quickly remind people that I have a free service called the Speculators Digest. You may or may not like me or my work, but the one promise I can give you is that we will not spam you with a flood of daily advertisements if you sign up. I hate that stuff. So check it out, see if you like it, and then we can go from there.
All right, guys. Well, if you enjoyed this content, be sure to give us a like, comment down below. Do you agree or disagree with any of Lobo's takes, even his contrarian uranium take? Is uranium the contrarian play now? What do you think? Drop me a comment down below. And if you enjoyed this content, remember to hit that subscribe button. 80% of you guys who are watching this content are not subscribed. So let's flip that ratio around. Subscribe to the channel so we can keep getting guests like Lobo, and I will see you in the next episode. Bye, y'all.